If you buy real estate with an LLC, a trust, or all cash, your next property purchase could be reported to the federal government. And the scary part, most investors still have no idea this rule exists. In a minute, I'll show you exactly which deals get reported, which ones don't, and why this changes how smart investors buy real estate going forward. But first, you need to understand what's coming. For those who don't know me, please let me introduce myself. My name is Tony Bitar. I'm a real estate agent and I work with buyers, sellers, and investors across Wisconsin and Illinois. And my job is simple: help people make smart real estate decisions before mistakes get kind of expensive. Starting March 1st in 2026, a new federal reporting rule goes live through FinCEN. That stands for the Financial Crimes Enforcement Network. This rule was designed to stop money laundering in real estate. But make no mistake, it's about to fundamentally change how investors buy property in the United States. This isn't a guideline, this isn't optional, this is federal law. And remember what I said at the beginning of this video: if you buy with an LLC, a trust, or cash, this applies directly to you. However, if you're buying a home in your personal name with a traditional mortgage, this may not affect you. But if you invest through an LLC, a corporation, a partnership, or a trust, and you pay cash, use private money, or seller financing, that's where everything changes. Because under this new rule, title companies are now required to report certain real estate transactions directly to the federal government. And they'll have to report your full legal identity, your home address, your date of birth, what you ate last night for dinner. No, not the last one, but they'll also have to provide your government ID information. And if you buy through an LLC or trust, they also report beneficial ownership and who actually controls the entity. The era of anonymous real estate investing is ending. And quick pause, if you're an investor, developer, or even just thinking about buying your first rental, hit subscribe. This channel is about staying ahead of the rules, the market, and the mistakes most people only learn after the deal is done, and you can't take it back. So when that time comes to buy or sell in Wisconsin or Northern Illinois, my team and I would love to be your real estate resource of choice. Now, let's get back to the video here on this rule change about FinCEN. So what triggers this new rule? Well, there are 4 scenarios. The first one is the property is residential real estate. The second one, the buyer is an LLC, corporation, or trust. The third one is the purchase is all cash or privately financed. And then number 4 is the no exemption applies. This includes single family homes, condos, townhomes, co-ops, and even residential development land. Yes, even land. Well, Tony, what if I just decide to ignore the rules? Well, if you decide to ignore the rules, the penalties are pretty serious. We're talking civil fines, criminal penalties, and extreme cases, prison time. That's real, and it's enforceable. Which to my next point, this is why this is not something you want to learn about the morning of your closing. That would be a rough morning, a really rough morning. Now, hang on before you call your real estate attorney. There are exemptions. Certain transfers due to death or divorce, also certified divorce real estate expert here, just saying. Some highly regulated trust structures fall in this category as well. Certain exchange-related transactions, but here's the truth most investors do not want to hear. The majority of standard investor purchases will now fall under this new rule. And here's the part almost no one is talking about. While the title company files a report, your real estate agent is now expected to identify these transactions early, because if this isn't flagged in advance, oh boy, deals are gonna get delayed and you're gonna have angry buyers, angry sellers, and angry people. And it's nothing that no one wants to be part of. So instead of getting your closings paused and transactions fall apart, I'm making sure my entire team and I are on this ahead of time. So in 2026, your team matters more than ever. Do you remember when I said this changes how you buy property? This is exactly why. So what should investors do now? Well, smarter investors are already planning. They're cleaning up entity structures, organizing ownership records. tightening banking trails. This is a big one. I really emphasize this one on commingling funds and using one as your personal account, your business account. Yeah, stop doing that. Make sure you talk to your accountant. And then building teams that understand compliance. The amateurs will find out when it's a little too late. The professionals are preparing now. So if you buy real estate with an LLC, a trust, or cash, remember what I said at the very beginning. Your next deal could be reported to the federal government. And if you want to stay ahead of what's coming in real estate, follow this channel as I'm putting out content like this often to make sure you're the most informed audience as I break down the changes before they are in full effect. And again, I'm Tony Bitar, your real estate professional in Wisconsin and Northern Illinois, and I'll see you on the next one.